Taking a minute. There we go. All right, we are live. We're live on Instagram and we're live on Facebook. Good morning, everybody. This is Billy Parrott, Billy and B Town Meridian Real Estate. Today is Friday.
Yay! Finally,
Woohoo!
the longest week ever.
It really is.
So
Has
long.
been. Yes.
So long.
And I mean, honestly, it doesn't matter for realtors because.
And for lenders, it truly it doesn't.
And my husband's like, "Yay, it's Friday," and I'm like, "Yeah, that doesn't matter to me."
Yeah, good. Yay
That's
for you.
great for you, but I'm probably going to be working. So, good morning. I'm here with my friend Dede Stoner with Guild Mortgage, and we love doing this market update together because you always provide so much knowledge, and it's just always fun to talk to you.
Yeah.
So, thanks again for
Thank you.
doing this with me. So, good morning, Frank. Frank's already on
Hi,
there
Frank.
this morning. So we are chatting today because it sounds like you might have some new products because, spring is here. The spring market is, starting to arrive. We're seeing new listings coming on the market. Yep. Buyers are starting to come back after the shock of the interest rates.
Yep.
So we're seeing a lot of movement here in Billings. And so you want to just let us know kind of what some of the products that you've got coming up and let them know. And if you have questions while we're talking, go ahead and put them in the chat and we will try to answer those also on Instagram too. So
because there's lots of information out there. Some of it is accurate, some of it is kind of alarming. So let's talk about your questions so we can kind of give you a reality of what's really happening.
Yeah, because the news, that's what they're there for, right? Is to cause alarm, to be dramatic, and a lot of times it's not correct, the stuff that they put out there. So we're here to give you the real, the real.
We'll give you the real, and it doesn't have to be boring. No, we try and make it fun.
Yes.
That's why we like doing this.
That's right. So ask us your questions.
Yep.
Otherwise, it's going to be a very short interview.
Exactly. And no question is a dumb question.
That's right. Okay? That's right.
So if you see me roll my eyes, then that might have been taking it too far. But I'll do my best. I promise I don't roll my eyes.
I've never seen you roll your eyes.
I don't think I've ever rolled my eyes.
I'm sure maybe after I've left, you've rolled your eyes, but just kidding. Silence.
All right. Well, we do have, I'm really excited about these 4 products that we've brought out. It always seems like we're on the edge of the industry of bringing out or even bringing back products that maybe other companies don't have. And it's just to give you more options. Maybe this program doesn't work, or maybe somebody doesn't fit into this program. So Guild's really good about looking at the market and developing or bringing on programs to try and fit as many boxes. And when I say boxes, we don't check boxes, but everybody has their spot of what they need for a home loan. So one of the ones that we haven't had before, we had to actually broker to a third party, which many of these clients had to go to South Dakota for this one, is the HUD 184 loan. So what that is for federally registered or federally recognized Indian tribes and Alaskan tribes. And this is a lower down payment. So it's 2.25% down payment. It is an FHA loan. The monthly PMI is less and the upfront PMI is less. So it's a great way to recognize and get recognized tribes into a special loan program. We're doing these for only on non-tribal land, so fee simple properties currently. So if a property's on a reservation and it isn't fee simple means that you own the land and the house. We can do that if it's on the reservation. However, if the reservation owns the land, that might be a little bit trickier situation. So we do have that available. We are now doing renovation loans. I get lots of calls on those.
Oh, yeah.
And so I have always referred those out because it is a little bit more complicated loan. It is not a loan that you can call me and say, I'm looking at this house, it needs foundation issues. Can you do a loan on it? And it's not just a black and white and say, oh, yeah, no problem.
Yeah.
We do have a specialist for that, and it's super exciting. So we'll do the application in the office. We'll have a specialist look at it. And it's a case basis. So there's not necessarily repair amount limit.
Right.
There's not necessarily a certain type of repair limit. So those homes out there that may have those foundation situations that
yes.
we keep running into that
Mm.
you can't get a regular home loan on, we might be able to do the renovation loan.
Oh, that's
on that.
great. Yeah, because I get asked that a lot. Because
Mhm.
I mean, especially if you're in a certain price range and
Yep.
that's all that's available to you.
Yep.
It's like, okay, how can I make this work? So that's awesome.
Yeah, we're super excited about that
Yeah.
because that's again another one that I've always referred out because it is its own special animal.
Mhm.
And it does take a little bit more time. So that is something. Please get your financing set up in place first because it's not something that you call in and say, oh yeah, we can do that. We do need the time to take a look at it.
So kind of walk us through it. So say I've got a client and they're, 200 and under price
Mhm.
range, right? And we find a house and there's foundation issues. Maybe has settled 2 inches or something like
Mhm.
that. And they want to say, they want to see if they can do a home reno.
Mhm.
So what would the first steps be, I guess?
Call me. We'll do an application just for a regular pre-approval. Then I will send that information to our renovation specialist, and the approval will have to include the price of those renovations.
Okay.
So if somebody's only approved at 200, then and the renovations are going to cost 100,000, then that home's not going to be for them because if that would be a $300,000 loan
Okay,
at
gotcha.
that point.
Okay.
So if they're approved for 300 and the home's at 200, then that and the repairs are 100,
Yeah.
that might be something that can be looked at.
And so do they have to have the repairs done before closing, or is
Mhm.
that something they can close on it and then
Yep.
do the repairs?
Close on it and then do the repairs.
Okay.
Yep.
And is it something that they have to prove that the repairs were done,
Yep.
After the fact?
Mhm.
Okay.
Yep. It'll be
Okay.
the standard inspections, proving that the repairs are done, releasing the funds, during certain schedules of
Okay.
doing that. So it's not going to be a release all the funds up front type of
Oh,
situation.
okay.
Because that's going to, I think that nobody wants to be in that position
Yeah.
if something were to not go.
Is there
accurately.
like a time frame, like a time limit? So say we close on it March 31st. Do they have to have those repairs done within a certain time frame?
I think that there's a desire to have it done. Obviously, weather and
Yeah.
contractor availability, supply availability. So Guild's really flexible with that kind of stuff,
Okay.
as long as we're kept in the loop, because we understand that that things out of people's control are going
Right.
to come up.
Right.
As long as we know progress is being made.
Okay.
And again, we're kept in the loop on stuff.
So just giving updates and stuff as to what's going on.
Yeah.
Okay, cool.
Yeah.
Yeah, because I think that's a big one that
Mhm.
is we're going to see a lot of
Yes.
people wanting to do.
Mhm.
that.
Yeah.
So-
And it could be even if the home just wants some updates and you guys want to look at financing that into the loan. That's what the renovation loan is for too. It's not necessarily for the homes that need repairs in order to get into the home. Maybe you want to do some remodeling, and so that'll be the kind of the same thing too.
Okay. Okay, cool. So Mandy has a question. Is there a certain percentage you add to the repair quotes before pre-approval? That's a good question.
I will have to find out the answer to that, Mandy, because I'm not positive on how they take a look at that.
Okay.
So we'll save that one.
We're going to come back to you on that. That's a great question. And good morning to you too, Mandy. Mandy's my favorite person. She is the chair of YPN Billings now.
She is very fun.
And she is doing a great job. So kudos, Mandy.
Good job.
She said, thanks, Dede. Anybody on Instagram have questions? Got some people watching. Good morning, everybody. Okay. Yeah, and then going back to the HUD 184,
Yes.
I actually had a client, a good friend of mine, and he really wanted to keep. He had a house, but they wanted to buy another house. He really, really, really wanted to keep that house as a rental property. And on the traditional side, he couldn't make that work, but with HUD, he was able to keep it, and now he's renting it as part of his, portfolio.
Wow.
And yeah, so that was probably the first HUD 184 I've ever dealt with, and it was a great product for
Awesome.
him. So yeah,
very good.
Yeah.
All right. So the next one, this one is not necessarily unique to Guild, but it is available with limited lenders, and that's our FHA 0% down program.
Ooh.
What that means is you have your regular FHA loan at 3.5% down, And then we will provide the down payment, a second mortgage for 3.5% for either the down payment or closing costs if you have the down payment already.
That's nice.
And it is. It's not a first-time home buyer loan, so you don't have to be a first-time home buyer to use this product. And it is an income restricted program, but it has a very generous income limit on it. The income limit for Yellowstone County is about $114,000. And it's not household income, it's just application income. So if, let's say we have two parties on the loan, and their combined income is over the 114. But if I don't need the income from one of those parties, I can remove the income if the other party can qualify for the loan.
Okay.
I can remove the income from the other party. That person can still stay on the loan. We just won't use their income to qualify. And that will help them get into that program.
That's outstanding.
Yeah.
Wow.
Yep. There's no minimum out of pocket.
Wow.
You can, if there's no prepayment penalty on that second mortgage, because you do pay it back at the same time. It is a 10-year loan. But I always highly encourage to knock those out.
Yeah. So somebody could essentially just come in, FHA, 3%.
Yep.
And zero down.
Yes.
Wow.
Yeah.
Okay.
Just have your closing costs. And so
That's awesome.
either you can pay those yourself, you can negotiate with the seller, obviously talk with your realtor about that. But it's a great way to help buyers get into a home with minimal out of pocket.
Yeah. No, that's awesome. And the income limit is really
super generous.
Yeah, super generous. I was like, wow,
Yeah.
where was that product when I was buying a house?
Exactly. And the fact that it's application or qualifying income, not household. So because so many of these programs with the assistance, it's the total household income, whether you're using that person on the loan or not. So this is super nice that we can remove income from the application to qualify.
Great. That's awesome.
Obviously, if you're wanting both incomes to qualify for more of a house, this is not going to be the product for you.
And so could someone, so say you got, husband George and his wife Nancy, right? And he's the one that qualifies, but he wants her on the title. He can always add her on the title after the fact, right?
We can add on title during the process.
Okay.
So just have that other person on the buy sell. If that person wants to be on the loan too, that's fine as well.
Okay, cool. Awesome.
Yeah. So that's a good one that we like. I've quoted that out for a couple of buyers are pretty excited.
Yeah. Yeah. Cause not all the time do you have that cash just sitting there, right? For a down payment. So that's a great way to get into a house.
And average incomes are up now. I mean, everybody has seen the income is up. On average, I see anywhere between $22 and $28 an hour, where 3 years ago, 15 to 18 was average. So with the higher income limits, it still doesn't feel like it's enough to save money for a down payment and or closing costs. So this program gives those higher income households an opportunity to still use an assistance program.
That's great.
And not get penalized because
that's exciting news. You heard it here first, people. Maybe. Wait, what is it? So it's called the FHA
zero down.
Zero down. I put 0% to zero down. Okay. And is it 3 or 3.5%?
3.5.
Okay, 3.5%.
Okay. So typical FHA requirements and guidelines are applicable. There's not any additional hoops that we have to jump through on that.
And you said this. So the second mortgage is at what percent financing?
2% higher.
2% higher. Okay. So the second mortgage. I'm just writing myself notes so I remember all of this later on.
So the payments, if you're familiar with the Montana Board of Housing first and second program,
that's what I use.
The payments are very similar to those.
Oh, yeah. That's not bad at all then. No. Yeah, I forget that it's even there.
Yep.
Half the time. Exactly. And then you just pay it back after a certain amount of time.
No, at the same time.
So you
have two payments.
Okay.
At the same time. But I would, any extra that you plan on paying towards principal, just knock that second mortgage out. Because it's a much smaller mortgage. So for example, if you're looking at a $300,000 property and that second mortgage is going to be about $10,500, just knock that $10,000.
That's smart.
As quickly as you can
to do that. Because I think a lot of people forget that when they're making their payment is to specify if they're paying more where they want that money to go to. So that's smart to pay that second one off. Yeah. Awesome. Yeah. What else do you got? You got some nuggets for us today.
So
it's like you're giving us gifts. Is it Christmas time?
I know. no, I love that we have stuff that I've gotten questions on, and either I have to say, no, I'm sorry.
Yeah.
We don't have that, or I have to send you to someplace else.
And you hate that? You're like,
I hate that so much because I want to be that person. I want to do it all.
I want to be there. I want to be that person to help you. Well, because I ran into you at GRI, or I think it was even before that. And you're like, oh my gosh, I have so many new things to tell you about. So yes, it was so exciting.
Yeah, so this is such great timing.
Yeah, definitely.
All right, and our final one. This is one that we've had before. Okay. We brought it back. The Home Depot loan. How many of you remember the Home Depot loan? We call it the Home Depot loan. The technical term is the 3-2-1.
Oh, the 3-2-1.
Yep.
I know that.
Not to confuse that with the temporary buy downs and the 3-2-1 buy downs and blah blah blah. We'll talk about that another time.
Yes.
So that's why I say Home Depot loan. And the reason is because it's a conventional loan. This one is for first-time home buyers. So it is a conventional loan, minimum 3% down. We will give you a grant for closing costs up to $2,500, anywhere between $1,000 to $2,500, depending on where your average or area median income falls. And then at closing, you'll get a $2,000 Home Depot gift card from us.
Oh,
yes.
That's nice.
$2,000 after closing.
So that's why they call it a Home Depot loan.
Yep, that's why I call it the Home Depot.
So you can buy a refrigerator. Yep. Well, I mean, can you?
I don't know what refrigerators
for that
cost anymore. I'm thinking paint and carpet remnants, but
or faucet or something like that, right?
Yep. Use it for all the little stuff.
That's great.
So it is definitely great. The home buyers love it. It is an income restricted program, so I do believe it's $67,400 or $68,400, something like that.
Okay.
And it is also only application income, so that means if we only use the income that we need for qualifying. So that's really great too. So that's again, if you have two people in the household, together making $100,000, but you only need the income of one to qualify for that program, that is an option for you. Awesome. And no, the interest rate is not higher to give you those credits.
Oh, okay. Well, that's good.
Yes, because I know that has been
mentioned.
What's the catch? Before. What's the catch? Because this is a specific first-time homebuyer program, and the interest rates actually are favorable more favorable because it is a first-time homebuyer program.
Okay. Awesome.
Yes. So
very cool.
No higher fees, no higher rates to use this program. This is truly a gift from us.
Great.
Yep.
Great. You have a fan out there, Jeremiah's J. Mamonero.
Oh, hey.
Dede! Not just Dede, it's Dede.
That's just helping us wake up today.
Wait. Dede!
Oh my gosh.
Hello.
Hi.
He's from Rochester, New York. He's
goodness.
been here. He's been a speaker here. He's actually going to be speaking in October. You should come to that.
Exciting. What is that in October?
So it's our White Paint Advance. It's at Chico Hot Springs. So good excuse to go to Chico and write it off, right? Yeah. Social media ninjas are coming, and it's all about social media for a full day. So he's one of the speakers. So it'll be good. That'd be a good time. So come October 26th, everybody. I'm just throwing that out there.
October 26th.
Just throwing that out there if anybody wants to learn from the social media ninjas. Okay. Anyway, awesome. Squirrel. No.
Yeah.
So
yep. So that's my news.
I love it.
I'm excited.
So many good things.
Yes, I love, and we still have all of our normal products we work with. Montana Board of Housing, there's several options there. The City of Billings has their own program as well. And then just, the regular FHA, rural development, conventional loans, VA loans. We love VA loans. I get asked that a lot.
Yeah.
We're very well versed in VA loans.
Oh, yes, you are.
Yeah. We know those in and out. We work really hard to get our veterans into homes. And then there was something else. What was I going to say? I lost my train of thought.
I do that all the time.
It's because I'm getting old. My brain can only handle. Apparently,
well, there's a lot going on. We've got this going on. There's comments here, and then we've got the Instagram going. There's a lot to look at it.
I know. I think I filled my brain. I'm at max capacity already.
Drink more coffee.
I know.
Drink more coffee. Questions? Anybody have any questions that they have? So where are, and I know that people probably ask you this all the time. Where are interest rates right now? And I know that's a hard question to ask because it varies, right?
It does vary. Yep. Interest rates vary on a daily basis. And you can thank the reports that come out, how the media presents it.
Yeah.
Because interest rates are affected by what's going on in the stock market, which is affected by what's going on in the economic reports that come out.
Yeah.
So on any given day, on average, between 6 and 7 is pretty standard. Obviously, everybody's situation is completely different. Mortgage rates are not a black and white answer. So everybody is completely different. And then changes are coming up starting on May 1st. So those pricing effects are going into place now. That right now the best credit score, or excuse me, the credit score that gives you the best interest rate is 740. That's changing to 780.
Oh.
So things are going to change a little bit because of that.
Interesting.
Those changes are also going to be favorable for those that are maybe in the high 600s, mid to high 600s. The interest rate changes are actually going to benefit those buyers. So there's some good and some not great coming out. So that makes the interest rates kind of hard right now too.
It's just like, woo.
Absolutely.
Hopefully like roller coasters.
Yep. Now you can buy down to lower interest rates.
Yeah, let's talk about that because
Yes.
I was just talking to her about this before we went live, and I've been seeing a lot of offers coming in. They're being really creative, right? Asking for like crazy amount of closing costs. Like one I had was 10,000 closing costs, and it was used to, for the closing costs and then also to possibly buy down the rate. So you want to talk to us a little bit about that option? And
Sure.
Okay.
Yep. So there's a couple ways. There's two ways that you can do your interest rates. You can do a temporary buy down, which is where you have the seller pay the amount of funds because they're covering the difference in the interest rate for that period of time. So I'm going to talk about the most common one. It's called a 2-1 buy down.
Okay.
So what that means is for the first 2 years of the loan, you'll lock in. I'm going to use a very general interest rate right now. So let's say you lock in at 6%. And you lock in at a temporary buy down, the 2-1 temporary buy down. What that means is the seller is providing funds upfront to pay for the first year. The payment difference is based upon 2% difference.
Okay.
So not your payments based upon 4% instead of 6%. The second year, it goes up 1% to 5%. So your payment's based upon 5%. Then the third year, your payment will be the regular 6% payment. Now, in that time frame, your mortgage is still locked in at 6%. So what the seller is paying is the difference, the interest payment difference between the 6 and the 4, and then the 6 and the 5. And so on average on that, it's about $10,000 to the seller. The first year, it can save you $500 to $600 a month in your payment. Here's the kicker on that, though.
Wait, there's more.
There's more. So, well, that sounds great, right? You're like, oh, I can get a payment at $600 less than what the normal payment would be, right? However, that first year, when that payment adjusts, now you're not in an adjustable rate mortgage. You're just in a temporary mortgage.
Yeah.
Or excuse me, temporary rate. So that first year, when that payment goes to move up to that 5%, that's at least $300 a month.
Yeah.
That's not including any increases in your taxes and your insurance.
That's
we all know.
You got to remember that.
Yep, we all know
does
taxes
fluctuate.
and insurance are.
It's going to go up.
Yes.
It never goes down.
It never goes down. And we've seen some pretty dramatic increases.
Yeah.
The property taxes have not caught up here yet.
Yes.
And
they're working on it.
They're working on it. So let's pretend without the taxes and the insurance, your payment goes up $300 the first year, a month. Can your budget absorb that extra $300 a month? And that's for the first year, or excuse me, that's in year 2. Year 3, your payment's going to go up another $300 because it's catching up to what that interest rate is.
Yeah.
So I know a lot of people's budgets can't absorb a $50 a month increase in payments.
Yeah.
And it's just the way we work our budgets. And so, yes, it sounds great to have a $600 a month less payment
at first.
I advise every single one of my clients that asks about this, do you think you can handle $300 more a month
and still be able to eat?
And still have fun.
Not just ramen.
So do you know on average, statistically, only 7% of buyers use the temporary buy down?
Really? Interesting.
Yep. And it's because of that budget adjustment.
Yeah. I mean, it makes sense.
Yep.
Yeah.
It sounds great up front, and it's a great selling tool or marketing tool. But we don't want to put people in a tough financial position. And that after that first year, and somebody all of a sudden they're in the position to possibly lose their home because they can't afford that extra $300 a month.
And that makes, I mean, that can make a huge make it or break it.
Yes, absolutely.
Yeah. And here's the thing too. I tell people all the time, because I've been in this boat, don't overbuy. Like, make sure that, you know, that you, like you said, are budgeting, right? You want to still have fun. You still want to live life. You don't want to live for your house. I've been there. I've done that. And I've used that experience to tell my clients, especially when I see them going, but I really want this house, but I'm going to be struggling. No, don't do it. Don't do it, girl. Don't do it. You know what I mean? Because then you're going to hate your house. You're going to resent it every day. And because you can't do other things, you can't go have fun. You can't go on that trip with your family. So,
and then you're going to be calling me every other month. I need my payment to go down. Can we refinance this? We don't want to do that.
Because refinancing costs money.
It does cost money. Yes. Even when you see the ads, refinance, no fees. There's fees.
Always fees.
There's always a cost. But that's another topic. I can go off on that tangent any day.
So what are the questions that I've had with this? What did you call it again? A buy down?
Temporary buy down.
Can they, in that period of time, say the interest rate was at 6% when they did it, say it dropped like to 3% or something, right? Can they refinance at that time?
Okay. And that's kind of the thought process behind that is everybody's hoping the interest rates go down.
Do you see them going down back to that?
I doubt we'll go to.
I don't think so either.
Unless we have another huge event, world event that I never thought I would have to say that. I have to tell people when they ask me, well, how long is my approval good for? Well, depending on your financial situation and what you do with your credit, etc., I now have to add, and in the event of a major world event that affects our industry, which was COVID affected it tremendously. Yes. Then we do anticipate rates going down, but not to that
and
level.
I think that's what people forget, right? Is that's why they dropped so low.
Absolutely.
Was because of COVID.
We were in the 5s and 6s in 2019, 18 and 19 before that happened.
Yeah. And that's a more normal-ish rate.
It's pretty average. We just got really spoiled.
Spoiled.
So it is. I get it. It's hard. I have clients who call me and they're locked in 2 and 3% rates. Most of my clients right now are locked in 2 and 3% rates. And that's kind of tough to stomach when you're looking at what today's rates are. Today's rates, it doesn't mean today's rates suck. It just means that we're just in a more normal market. We were in a very unusual market previously.
And that gets me onto something else, assumable mortgages. So I know that some people have been getting creative and making sure, right, when they got their loan, to make sure it was assumable, because maybe that's something they can offer the buyer. Do you want to talk to us about that, like that process?
So the government loans are the ones that are assumable: rural development, FHA, and a VA. Conventional loans are not assumable. So what that means is the buyer does have to qualify to purchase that home, to take over the loan payment. They have to go through the servicer that's holding the mortgage at that time. Unfortunately, it is a long process. So it is not going to be a 30-day close. I would be surprised if it's a 60-day close.
Oh, really?
It just depends on your servicer.
Good to know.
So it is not going to be a quick closing. So the buyer does have to qualify like they would on a regular mortgage to take over that payment. Now, the buyer also has to come up with the equity difference. So the buyer's still buying it. Let's say they owe $150 on it, but they're selling it for $250. The buyer still has to come up with that $100,000 as a down payment. That's not wrapped into the loan, because they're just taking over the payment. So that's something that buyer has to take a look at as well. And that could be. We don't do those specifically. We have a special department for that. So I'm not sure how it works if you can tie on a second, like get a HELOC at the same time. So they would definitely want to researched that before.
Oh, okay. That's that. See, that's good to know.
Yeah, because down payment's usually everybody's biggest challenge.
Mm-hmm.
So assumable mortgages, or assuming a property like that still has that down payment challenge
Right.
on there.
Because I know that that's kind of causing some of this low inventory issue is that people are in the house at 2.5%, right? And they're like, well, if I sell my house and then I'm going to have to buy, you know what I mean? I'm going to get less house and this and that. So, I mean, it makes sense.
Yep.
So, I mean, how do you bypass that? You really can't. I mean, it is what it is. I mean, if you're living in a shoebox, right? And you're going to have twins or something, or a family, or I mean, you're going to have to move regardless, right? I mean, so yeah.
So it's kind of a catch-22 on that. Something to think about is maybe keeping that one for a rental.
Yeah, that's
and
true.
Taking using the equity in that home, which there's a couple different ways you can do that, as the down payment on the next one. So there's ways to look at that.
Yeah.
If you can't qualify that way, then obviously selling is going to be the option, which we need properties. So
yes, we do. I've been asked, VA, can you do that? Can you, so say, you bought this house, you don't want to sell it, you want to keep it as a rental. Can you keep it as a rental and buy another property and still use the VA program?
You can. There's a few ways on that as well. So the VA loan, you have what's called entitlement. And so the VA guarantees up to a certain percentage of the loan amount. And so when you use your VA for the first one, a certain percentage of that entitlement is used on that home. As you pay that down, some of that entitlement gets released. So if you want to use your VA loan again on the next home, we check to see how much entitlement you have left over, and we'll let you know what the sales price is to still be able to get into that at 0% down. Or if the sales price is more than what entitlement is available, then there could be a down payment that's required.
Gotcha. Okay. That's cool. It's good to know that that's an option, because I've been asked that. I'm like, I think so.
Yep. And a lot of people think that you can use your certificate only once, and that's not true. You can use it over and over.
Yep. That's awesome. Mandy has a question. Let's see. Everyone is saying May 10th is going to be an important day for real estate. What do you think? I don't know. Do you know anything about May 10th?
Is this another world event?
Yeah. Do you know something, Mandy, that we don't know? Like, should we get the bunkers ready? Like,
can I buy a vowel?
Give us a hint, Mandy. What are you hearing?
Exactly.
Regarding the CPI report. Do you know what that is?
Consumer Price Index? Is that what?
We're waiting for her to answer.
Okay.
Let's just
a little more information.
Let's just assume that that's what she's talking about. Okay. But I don't know what a CPI report. You're sounding smarter than us, Mandy. Oh yeah, Consumer Price Index.
So I have to say I'm not versed on what's happening on May 10th.
Tell us
right now.
If anybody knows.
Yep. I will definitely be doing some research. I know that there's the PCE report coming out today, which is the personal.
I don't know.
I had it this morning, so I was going to talk about it. Gosh, I told my brain's done.
I'm telling you, drink your coffee, Dede. Drink it up.
So what goes on in the economy, and that's with consumer spending, GDP, etc. The strength of the economy does impact what's going on. So with inflation, prices are really high. Inflation is not at a great level right now. And so that's why they keep raising the federal funds rate, right? To try and stop the spending, stop the prices from going up. But it's not stopping people from spending.
Right.
And so that is not lowering inflation in the way that they've been trying. Yes. Yeah. So that is impacting. That's why rates are also staying high, because the economy is still strong.
Yeah.
That's what I was looking for. the economy is still very strong despite the inflation. And so we kind of have two
It's
heads
fighting
right now. Who's going to be the winner? Is inflation going to be the winner? Is a strong economy going to be the winner? So that's really creating a lot of volatility in the market, which affects the stock market. Affects the bond market, and in turn that affects the mortgage rates.
Yeah,
so
that makes sense. May 10th.
I'm going to look into May 10th now. May 10th.
What day is that? What day is May 10th?
May 10th.
Let me look at your calendar. What day is that? That is that's a Wednesday.
I kind of should we not get out of bed that day?
Maybe, I know, maybe we shouldn't
should we stay home?
Let's see. She says, I need to find my notes regarding who said May 10th CPI report would be impactful. If I remember correctly, they said rates may go down at that time. Oh, so it's a positive thing, possibly.
So there's a lot of guessing that goes on with the economists. Yes. And that's why you see such volatility as well. So they play the forward game. So they're going to take information that came out, and then they're going to predict what's going to happen because of this information that came out, or because of this action that came out. So these economists or financial advisors, those who play with fire. Yes, the money. I'm trying to not talk in. I know. I'm trying to talk in layman's terms so people can understand. Right. So, federal funds rate raised. So now they're trying to predict what's going to happen over the next 30 to 60 days. And so they play the stock and the bond market with that information. They're like, oh, well, we predict this is going to happen because of this and this. So that's why you see such fluctuations in the finance market. Their predictions affect it. And that's what affects the interest rates as well. And so when they're wrong, then you see all this craziness. And then when they're right, you might not see much craziness because they've already predicted it. They've already planned for it. They've already bought into it. So then we don't see much reaction at all.
Right.
So there really is no rhyme or reason in this. It's truly guessing.
Because you can't. Yeah, I have clients ask me all the time, well, what do you think? What do you think? I'm like, no idea.
Exactly. Exactly. Rates were headed up really, they were in the 7s. And then the bank failure happened. Nobody saw that coming. No. And then that impacted the rates and brought them down. Because it was a spook to the stock market.
Right. Yeah.
So it's stuff like that. When they're predicting, oh, well, inflation should go down. And so they're playing that before the actual report comes out. And then the report comes out that, nope, inflation is still the same or up. All of a sudden, we've got this chaos in the finance markets. So it truly is impossible to try and guess what's going to happen. All I can say is they say rates could be going down by the end of this year into next year.
But what that is
exactly
probably a 0.5% or something. It's not going to be
in anything. Anything can happen between now and then.
Yeah.
Absolutely anything.
Could have COVID number 2. Who knows?
Exactly. This is what we're seeing with the. Oh, sorry. I'm trying to do it in the screen. It's like this. Yep. I used to be a pretty good gauger. Thank you. On interest rates to be able to get my clients into the best rates. And we're just not in that market anymore.
Yeah.
It's here are your options. If you want to wait, obviously you're taking these risks because there's so much unpredictability right now.
Yeah. Because they could go up even higher.
And when they go up fast.
Yeah.
Really fast.
Yeah.
We can see 0.5% in a day.
Too.
Yep. And then the next day. So when there's something that really spooks the market.
Yeah. It's very volatile.
Yeah. So what I say is if you're in the market, being in the market is different for everybody. It might not be the right time for some people, and that's okay.
Yeah.
Others want to get into the market right now. They want to buy a house. They're tired of paying rent. Just let me give you this example. If you're on average paying $2,000 a month rent and you want to wait a year or two because you think rates are going to go down or whatever your beliefs are, let's say 2 years, that's $48,000 that you just gave to your landlord that could be going into your own home.
You're paying a mortgage,
You're
just
paying a
not your
mortgage.
own.
Exactly.
That's right.
Yeah. So definitely think about that.
Yeah.
But in the meantime, if somebody's in the market, they're ready to buy a home, the rates are what they are.
Yep.
They will change. We can always refinance into a lower rate sometime down the road. That's not a problem.
Yeah.
But you're building equity.
Yes.
This is your asset. This is your home. You can do what you want with it. Whereas if you're renting, you don't really have that option.
Even Snoop Doggy Dogg said, if you don't own land, you don't own nothing.
Ooh.
Wise words of Snoop Doggy Dogg.
I love Snoop.
They should make that. Oh my gosh, I just had a good idea. T-shirts. We should make T-shirts that say that, and it's got Snoop on there, and then
I bet you could get.
Don't nobody
call
Billings that
too.
Ooh, that'd be cool, and then be like a quote, Snoop Doggy Dogg.
Yep,
I like that. I like it. Even he's smart. He knows real estate's the best investment you can make.
Yep.
Yes, for sure.
And I'm gonna tag on to that because I this is something I've really noticed.
Okay.
So we all know the prices of cars have gone up, right?
Oh God, yes. Everything's gone up.
Hey Jeff.
What's up, Jeff?
What I've seen a lot of 60, actually I don't even see 60 anymore. I see 70, 80, $90,000 car loans. Payments are $700, $800, $1,000 a month.
Why would you
and
do
that's
that?
At what, 5 to 7% interest?
Yeah, that's insane.
So consumers had no problem adjusting to the higher car amounts, higher car rates, prices, payments. Okay.
Mm-hmm.
No, I have not heard anybody complaining about any of that.
That's true.
That is a depreciating.
Oh, big time.
Debt. That's not even an asset. It's depreciating. So when I hear the objection to home prices and mortgage rates, and I see somebody driving $100,000 vehicle at $1,000 a month.
I mean, you can live in that vehicle.
You can live in that vehicle. Exactly. So just something to think about, to compare.
Yeah.
$1,000 a month eats up a lot of income when you're trying to qualify for a home. We don't qualify on paycheck to paycheck, whereas as a society, we tend to live on paycheck to paycheck.
Mm-hmm.
So I pulled a credit report just recently, and between the 2 vehicles and 3 recreational vehicles, the payments were $2,300 a month.
Dang.
That was over 35% of their gross income.
Wow.
Which means about 50% of their net income.
Wow.
That did not leave much left over to qualify for a house.
No.
Yeah. And that didn't include the other debts that were on the credit report.
Yeah. Yeah. So think about that before you buy that fancy vehicle.
Exactly. After you buy the house, if you want to buy the new vehicle, that's great.
Yes. Yes.
But if you are in the market to buy a house and you think you want to buy a new car, wait on the car.
Mm-hmm.
Please wait on the car. If you want a particular type of house, that car payment is going to eat into the type of house that you want to buy and what you can qualify for.
And don't buy a car if you're in the process of buying a house.
Please.
Do not buy a car before closing because you're probably not going to close.
Yep. Yeah, we do recheck credit.
So
the
wait
week of closing.
And don't wait, wait until it's recorded. Don't wait until you've signed the papers because it's not done yet. It's not done until it's recorded.
Exactly.
Don't do it.
Yes.
Don't do it, girl.
Some pretty savvy clients. And they're like, so did you pull my credit report yet? Like, why? What are you doing?
Yeah. And not appliances too, like pulling a new credit line from, don't do it. Don't do it, girl.
Yep. I know. I'm starting to see the 0% interest coming back, and for 12 months.
Don't do it.
Please don't, because that's just more paperwork you have to provide for us.
Yeah. Don't do it.
Mm-hmm.
Jeff said, and pull this back up. Good point. And this is a property manager saying this.
Yes, Jeff is a great property manager.
He is a great if you need a property manager, hit up my buddy Jeff.
Yeah.
It's also important to note that you're paying that high rate in the form of increased rent prices as well, since new investors are paying increased rates. That is so true.
That is true.
Yes. I just heard this is kind of a sad thing, and I don't know all the details, but I heard this company came in and bought all the mobile home, not all of them, but a few big major mobile home parks here in Billings. and just raise the rent like
That's what I
crazy.
heard too.
You heard that too?
Yep.
They were like $350 lot rent, right?
Mhm.
Shot up to $700
Oh
for
my
lot
gosh.
rent. And these people are like, what? Like you can't
Mhm.
you can't afford that. That's
Yep.
the reason why they're renting a lot.
Mhm.
So it's insane. So I've had a lot of calls for people looking for, mobile home lots to purchase, and there's just nothing. I've got one right now on Matson Lane if you're interested. Just throwing that out there. But other than that, when I pulled up, there's hardly anything available. That's not like crazy acreage, right?
Yeah.
So that there you go, right there. That's an example. You cannot control what the landlord's gonna charge you for rent, and that could go up.
Yep.
You could double it.
That's an excellent. I'm glad Jeff you brought that up because we all see the comments on social media when rentals are posted as available. If you run the numbers on what the home sales are going for with the current interest rates, those rent payments are barely covering the payment if they are.
Yeah.
It's I know that when the house prices were a lot lower, the lower rents covered that.
Right.
When they're reselling those and those properties are going for double, maybe triple what they were, that is a big payment.
Oh yeah.
And the rents aren't covering that.
No,
so
they're not.
I know it's a tough situation for
and I can say that firsthand. I've got an
Mhm.
investor client that we've been looking for something for 2 years,
Mhm.
and she's like, it doesn't pencil out.
It doesn't pencil out.
None of them ever pencil out, but it's like, that's just how it is. You're gonna have to just, buy it anyway and possibly raise the rents. And that's the sad part.
It is the sad part.
There's no affordable housing out there.
Exactly. That I think that our lower prices that we were used to maybe aren't a thing of the past.
Oh yeah.
And
definitely.
it's the same with, the prices of everything has gone up.
Yeah.
And I think that it's just following that.
Yeah. Yeah, absolutely.
Yeah.
Angela, our friend Angela, being so smart makes you ladies so damn attractive.
Ooh. Thanks.
I woke up like this. Not.
I promise.
I wish.
A lot of work.
So I have to get up at 5 a.m. No.
This is my 4:30 a.m. face.
Yeah. This is how I woke up this morning. No, you just see how I wake up in the morning. It's not pretty.
Thank you. You are Angela. Sweet.
Angela, you are the smartest lady I know.
Yes,
girl.
Yep.
So let's just end this off on a fun note.
Yes.
I mean, kind of fun, but kind of not. What are some of the things that could stop a transaction from closing? Maybe some nightmare stories that you've heard.
Oh gosh. One, a very common one is quitting jobs.
Yes.
So we do verify employment right up through the day of closing because for various reasons, it could be because of switching a job. It could be because they want to take time off to get settled into the home.
Oh.
That can stop your transaction.
I never thought of that.
Yeah.
That's a good point.
And I know that the general concept is if they go and get a different job, well, I still have income coming in. What's the problem? I get that. As part of the loan process, we have to verify all of that. And so if somebody switches jobs, which we have had happen, especially in the last few years, people are moving jobs like crazy.
Yeah.
And please keep your W-2s.
Keep them.
Please keep them. Because we have to track that. Anyway. You guys should just come and work with me for a week.
Oh man, I couldn't even imagine doing your job, honestly.
So anyway, the quitting of the jobs, and if you're just going into like a lateral position, or it's something where you're just improving your situation, your salary goes up, your hourly wage goes up, that may not cause much of a delay depending on when we find out. If you tell us ahead of time, please, just makes all of our lives better.
Yeah, ask first before you do anything different.
If you go from a stable income position to commission,
Oh God,
That's going to kill the deal.
forget about it.
Because commission is a variable income. We don't
Yeah.
know what that's going to
Yeah.
look like.
Yeah.
We all hope everybody makes the most amount of money they can. But until you've worked that for at least 12 months, we can't do anything with it.
Yeah, exactly.
Taking out new credit.
Don't do it. Don't do it. Don't do it. Don't do it.
Don't do it. You can pay cash. You can have anybody else buy it for you. Please don't take out new credit. Because when we qualify you, we're taking a picture of what your financial picture looks like, but we don't just stop there.
Yeah.
We continuously verify that information. And that's the same with your pre-approval. Although your picture looks like this one day, if 60 days later it's changed, that could change your approval. And that's the same with your loan program or your loan approval when you're under contract.
Yeah.
If you change something majorly about that, that could impact the closing. And it has. Several years ago, it impacted somebody's closing tremendously because of the amount of furniture bought.
Oh, wow. Yeah. And so that would be the same if, say, they already have like an American Express card. Don't go charging it up.
Exactly. Don't go charging it up.
So it's not just opening a new account. It's,
exactly.
Charging it.
Okay. Yep. Because we don't want an increase in your monthly payments.
Yeah, no.
Yeah. No. So some people can absorb that if you're not maxing out on what you're qualified for and with what your other monthly expenses are. We can accommodate that pretty easily sometimes, or when in those situations. But if we are maxed out on what we're qualified for, any little increase in your credit report payments can make things a little not fun.
Yeah, it's best to ask.
Yes, please ask. I love when my clients call me and they say, "Oh, I need to buy this. Is it okay if I use my debit card?" I love that.
Yes.
I absolutely love.
Yes.
I would rather you ask. It's not please don't do I'd rather ask for forgiveness than permission.
Yeah, don't do that.
Please ask permission.
Ask for permission. Call Dede.
Yes, call me.
Mandy says, but I really want that Maurice's credit card.
The $15 savings is not worth it.
We all know where you shop now, Mandy. So I will share my story about what not to do. Some of you may have seen this video that I put out, but my dear friends just dealt with the worst mortgage. I'm not going to say who it is, but it's a national lender. They asked my client for the inspection notice. Okay. We don't provide the inspection notice to the lender. They don't want to see it. They don't want to look at it.
Please don't.
And they asked him for it for some reason. I don't know why. And he's like, okay. And sent it to them. Okay. Caused like a whole crazy, and there was nothing like major on the inspection notice, right? There was no structural, nothing that would cause like an alarm with FHA, anything like that, right? These are like tedious items. One being, there was dog poop in the backyard. Okay. We're in winter still, even though it's end of March.
Yep.
Here in Montana. And so, it's frozen to the ground. And one of the things we asked the seller was to remove it before closing. Okay. And they agreed to it. Well, we just keep getting snow, keep getting snow. So we are almost there to closing, and the underwriter was like, well, this hasn't been done yet. And so we explained to him, well, we can't because it's frozen to the ground. Okay. And so the seller provided a poop fairy gift certificate. I'm not kidding you. It's called the poop fairy. If you're the poop fairy owner, great name. Love it. Poop fairy gift certificate. And so we're thinking this is going to solve it. Great. Right. So we send the copy poop fairy gift certificate. It's going to be picked up once the ground thaws, blah, blah, blah. Nope, that's not going to work. What? So they weren't going to let us close because on the inspection notice, it stated that it was supposed to be done before closing, and they weren't going to let us close. I fought it tooth and nail. I threw temper tantrums. I screamed. I yelled. I sent nasty emails. And they finally said, fine. I think they just finally had enough of me. So do not send the inspection report or the inspection notice to your mortgage lender. Even if they ask, don't do it. Tell your realtor that they're asking you. They'll take care of it.
Exactly.
I could not believe it. I was like, are you kidding me? This is not a safety issue for people.
I still can't believe that this is a real story.
This is a real
I
story.
can't.
I couldn't believe it either. I just shook
Yes.
my head like, are you kidding me?
Poop.
I could
Stop
not.
the closing.
Yeah, poop.
Poop.
Dog poop. Poop Fairy came to the rescue.
Fairy. Is that a real business?
It's a real business.
That's fabulous.
Poop Fairy. So if you need a poop remover, call the Poop Fairy.
That's fabulous.
And the thing is the poop is still there because it's been
still
snowing.
frozen and it's been snowing.
So we're just waiting for the ground to thaw. So
Yes.
let's see. Let's see. Brandy told Mandy, no new blazers for you, Mandy. Mandy, yes, love their blazers. So affordable. This is like shout out to Maurice's.
Exactly. I'm gonna have to go check them out.
I should say sponsored by Maurice's. Today's coffee chat was sponsored by Maurice's.
Yeah.
Any final questions before we went a full hour.
It didn't feel
We
like
could
that.
just keep talking. I think
know.
all day
I can
long.
talk about this forever.
Yeah, but you got mortgages to do, and I got homes to sell.
Yeah.
Right?
We
Let's
got
see.
stuff.
Yeah. Mandy says they have new colors. I love it. I love it.
And it's 15% off, right?
Is it 15% off?
No, I'm just making a joke.
Oh,
'Cause that's why people open up cards. They're like, oh, I get 15%
That's
off.
true. Yeah, but then you're
The
paying the
$3,
interest.
the $3 is not worth it.
It's not worth
Please
it.
don't.
Don't do it, girl.
No.
Don't do
Shields is tricky though.
Oh,
They have
yes.
sometimes they've almost gotten me
They did
because
get
I
me.
do love saving money
They
where
did
I
get
can. But I have resisted opening a Shields
Good
card.
for you.
Yep.
They got me.
Did they?
They got me during COVID.
Mm-hmm.
You know, the gyms were closed, so we wanted like the bench set,
Mhm.
you know, workout, whatever.
Yep.
And they had this crazy offer, and I was like,
Yeah.
fine, sign me up.
Exactly.
And now I still have it. So what I do as a trick is I just don't take it with me when I go to Shields, so I don't use it. So don't do that. Don't take your credit cards and you won't use it.
Exactly.
Just, like, store them away.
Yeah.
That's a little tip.
Yeah.
All right. Seeing we don't have any additional questions, we're going to go ahead and end our coffee chat today. This was great. Thank
This was
you.
fun. Yeah, thank
a lot
you.
of great information. You know what I'm going to do? I'm going to do a reel, and I'm going to do a reel about your FHA zero down because
Sweet.
I think that is a great product.
It's so great. We're so
Yes.
excited about it because that median level income has just been kind of left out in the dust or left out in the Did I say that right?
Yes.
Left in the dust.
Left in the dust.
Because yes, you're making a decent income, but it doesn't feel like it's enough to put money aside. So this is a wonderful product for that income limit or that income level.
Yes. And, you know, watch the playback. Share this information with your clients or your friends or your family. Share the whole video.
Yep. And I have flyers too.
Yeah.
If you want some basic information, just reach out and I'm happy to send that to you.
Perfect. I love that.
Exactly.
See, hit up Dede. What's the best way to get a hold of you?
You can, oh gosh, I don't know what way you can't get a hold of me.
You're on Instagram. You're on Facebook.
Instagram, Facebook.
LinkedIn, probably.
Yep, LinkedIn. You can reach me on my email. You can text me. One thing I have to ask, and I'm surprised that I have to tell people this.
Yeah.
If you call me, please leave me a message.
Yes.
I
know.
Don't know if you've noticed. People will call, but they don't leave a message. And then I get a call from the realtor and say, oh, my client I referred to you said that they called you, but you're not calling them back.
Yeah.
And I'm like, I don't have a message.
Yeah.
I promise I don't return missed calls.
Yes. Leave a message. I know that happens all the time. Like I'll get a phone call and there's so many spam calls anymore.
So many.
And they use Montana numbers now. They do.
Somebody got me last week and I was so mad.
Yes.
I was so mad because I answered the call because it was a 406 number.
Yep.
And it turned out to be a recruiting call.
Oh,
and they wouldn't stop. As soon as I said, I am not interested.
They just kept talking.
I appreciate that, but then and there's more.
And here's more.
And here's more.
Yeah.
Yeah.
No.
So please leave us a message.
Leave a
or
message.
You can send me a text anytime as well.
And that's for realtors too. Leave us a message
Please
because
leave us
we
messages.
get so many calls, telemarketers, and if I don't know who you are, it doesn't come up my cut. I'm not going to call back.
Yep.
Unless you leave me a message.
Yeah.
So.
Yeah, because we do. The spam is terrible.
So bad.
Terrible.
So bad. So cool. Well, this was great. So
Yeah.
go back, look back, share this with your friends and
Mhm.
family. This is great information because you can buy. You can
You
buy
can
something.
buy. Yes.
If it's not the time now, it's going to be the time later.
Exactly.
So we can help you with that.
Yep. The
So-
right time is subjective to you,
Exactly. Right.
not to your friends, family, strangers, media.
Yeah.
It's subjective
Yes.
to you. And if you just want to talk about it and just say, I'm not really sure. I have
Mhm.
lots of appointments like that.
Yes.
Just want to come in and
And
talk
consultation.
about it. Yep.
Mm-hmm.
We
Yeah.
can do that.
There you go. Cool. Well, thanks, Dede.
All right,
Dede
thank
Stoner
you.
with Guild Mortgage.
Bye.
We'll probably do another one of these, in a few months. We should just do this quarterly.
I know.
We'll just do this
Mhm.
quarterly because I think that this is great information
It
that
is.
everybody needs to know about.
And it's fun.
Don't watch the
buying
news.
and selling a home is fun.
It
Exactly.
is.
Stop watching the news.
Stop watching the news.
Stop.
Just watch us.
Yes. We're much more fun.
We are much more fun. All right, guys. So thanks for watching, and we'll see you sometime soon.
Okay. Bye-bye. Take care.
Bye.